350. Well, you're a little bit short here, aren't you? Meaning there's still more demand than supply. What's going to happen to price if there's more demand than supply? Price will go up. So it's a law, okay? It's irrefutable. Now, what if your demand is 275 billion euros and you have 348.6? Now, basically what this means is, let's say there are $275 billion worth of outstanding mortgages and obligations from the banks. And the European Central Bank wants to provide more liquidity than what they need. Well, if demand is lower than supply, what's going to happen to price? It's going to go down. Now remember, this happened on, just a minute, I'm going to move. Here's the news article. ECB, Bank of England, flood Europe with some $500 billion to keep money markets lubricated. This was on December 18th. This hit at 5:24 in the afternoon. And this is, let me move this up so you'll have it, pr-inside.com. Okay? Just so you can see where I'm getting this from. So the ECB is pledged to satisfy unlimited bids at or above 4.21%, the weighted average allotment rate of the main refinancing operation that settled on December 12th. At the main refinancing tender Tuesday, to smooth out continued heavy demand for liquidity in the Eurozone banking system. So there's heavy demand, according to this article, in the banking system. The ECB also said that 390 banks and financial institutes submitted bids totaling 371 billion euro. That's 542.76 billion US. It raced between 4 and 4.45%. The maximum bid rate left analysts puzzled about why the banks that bid did so at that level, given that on Monday, the ECB said it was honoring all bids at or above 4.21. It's a huge amount, really significant, but liquidity needs are also significant. Strategist said BNP Paribas. BNP Paribas. It will have the most impact for rates between 2 weeks and 1 month. The large amount sought by banks may lead to fears that funding needs are still problematic. That's Tony Crescenzi of Miller Tabak and Company. I have no idea who he is. Probably somebody who is short pounds and short the euro. It is a simple case of supply and demand. In essence, therefore, in light of the injections, it could be said that the central banks are merely forming a bridge to a time when it is hoped that problems at the root of the short-term funding problem will begin to diminish. In 2008, many of these problems will in fact fade, barring a recession, albeit very slowly. Now, I've been talking about for several weeks that we are in unprecedented times. And, judging by some of, now this actually doesn't apply to the Dallas crew, but judging by some of the emails that I get from the crew members, they just don't understand this.